Welcome, Bruno Estier, to the Swiss Association of Market Technicians.
Thank you, Ron.
So we're delighted to be talking to you today about cycles. How do you apply cycles within your analysis?
Well, cycle is usually a secondary tool after watching the tape, of course. But cycles are interesting because they have been used by economists for a long time. And in technical analysis, people used three types of cycles. The seasonal cycle, the annual cycle, that means usually there is some oscillation during the year. People recall the sell in May and go away, so the period from May to September is usually underperforming the rest of the year. People expect a low around September, October. Then you've got the four-year cycle, which has been tied to the presidential US election cycle. And there, at the origin, it was an inventory cycle, so more something of the business cycle. And now it has become probably more of a political cycle, in the sense that during the first 2 years of the mandate of the new president, that's the time when he's passing all the new legislation, which are probably hurting a little bit the economy. And he gets either sanctioned or not for all his work at the midterm. That's the year that we are now. And he still has, anyway, because he's the president for another 2 years, time, namely 2 years, to develop some more fiscal measures in order to stimulate the economy just before his new election. So that has become the four-year presidential cycle. And then there is a third cycle been used in the past by an economist called Juggler, 10-year cycle, and it was an investment cycle. Basically, the time it takes to create a firm, build the firm, and then put the new product, the new chain of production into the firm, and then eventually change the chain of production every 10 years, because then you need to change the kind of product you are selling to your client. That's usually what is used by different technicians.
So out of these three big cycles, the long-term 10-year cycle, the medium-term presidential cycle, and the seasonal annual cycle, let's take a look at the presidential cycle right here and now as we approach these mid-term elections in the US.
Well, you see here, you see the influence on this old chart from 10 years ago by Ned Davis research, that here you've got basically an average. The blue line represents the average over 100 years of what happened during the first year, presidential year, the second, the third, and the fourth. And currently we are in 2018, that's why I put 2018 on the second presidential year. We're basically noticing that the first and the second year are in a flat trading range, and the third and the fourth year are more rising. That means that on average, there were more performance in the third and fourth year than during the first and the second year. These are statistics, of course these are averages, and it cannot be precise like a Swiss watch. But we notice also in each of these different presidential years that there is a kind of a low, more obviously seen in the first and the second year around the fourth quarter, or just at the beginning of the fourth quarter. That's the famous seasonality, annual seasonality.
And that's during the months of, traditionally, the months of September and October.
Right, it has been sometimes in October, sometimes in September. Presently it could be closer to September, we don't know.
And following on from this, how does this feed through to the longer term 10-year cycle that you're also watching?
Well, there it is more arbitrary. Basically, you have to select an anchoring point. If you admit that there is a relatively recurrent four-year cycle that we can see here also from 1962 to now, we notice two things. It has been relatively stable up to 2002. Then less visible during the last uptrend since 2009, because probably the trend up is so strong that the cycle cannot show up. But then the question for the technician is where you anchor your long-term investment cycle to combine it with the four-year cycle. I decided to take an important low, which was 1974. And by doing that, knowing that this 10-year cycle is not 10-year young, but a bit shorter, 9.25, I figured out that in 2002, again, on October, the 4-year and this 9.25-year cycle were coinciding together. So I decided that that was two important lows in the market history, and that was a justification for placing this 10-year cycle that way.
So that's a cycle cluster where the skew is basically negative, and so the market tends to follow through in that direction.
That's right. And now the question is, how do they interact with each other? Maybe there is a low for the 4-year cycle in 2018. And when we look with the same 10-year cycle, the low would be a bit later, maybe in 2021 or 2022.
Okay, so we're still in the negative leg of the long-term cycle, but that's going into 2020 onwards.
Right, and if nothing happened in the 4-year cycle, because that 4-year cycle seems to have disappeared since 2002, then we know that we are not out of the woods, because we might have some troubles 2 years from now.
And going back to the ticker tape, what does the short-term chart tell you, Bruno, in terms of upside and downside levels?
Well, if we have a 4-year cycle low right now, we still have 3 more weeks to do it, not much more time. We see that it is possible to make a correction, because in January we did a correction of 300 points in 2 weeks. So in 3 weeks we could do also the same amount. That could be represented by the green path that we have here. The red path is probably too bearish now. By now it's probably not going to happen. And we know also that we better see the break of key support levels in the coming days. That is 2900 and then 2864 in order to start a correction. If not, then we will have to accept that the uptrend is going to extend. How much? Well, the width of the previous trading range, 2872 to 2532, that's 300 points. Namely, we could go to March of next year toward 3200.
So great tactical views on the upside and the downside, with a preference to the downside view in line with the cycles. Thank you very much, Bruno.
You're welcome.